Appreciate you. All right, traders. Today is Sunday, March 2nd. It's 9 p.m. EST. We're trading for the preparation of this week. And our goal is to only get in at the best possible price. We want our discounts. We want our best levels, and we only want to risk as little as possible. And that's what we're going to talk about today. And we're going to look up some markups, specifically some B swing levels that Theo has dropped. And we're going to evaluate them. And then after that, we'll look at some other stocks, ETFs, indices, anything else that you guys want to take a look at on top of that. So remember, guys, we're only our main question we should ask ourselves is, what are we investing in and how can we invest in it with the least amount of risk? That's it. Before you talk about how much I'm going to make, you want to evaluate what is the process in which I can risk the least of. That's the main question as an investor. Because once you answer yourself that and find the least way to actually, the best way to eliminate risks, profits automatically happen. It's just an automatic. We can't guarantee a specific amount you can make because the market throws at you different things. Volatility happens sometimes more than others. Depends on what you're trading. Depends on how much you're investing in that asset versus someone else. Depends on what your stop loss is. Are you scalping for a few pips and that's it? Are you intraday trading or swing trading? So everything, it looks different for everybody. But the main thing is, how can I get in with the least amount of risk? And once you do that, it doesn't matter if you're scalping or swing trading, you should be able to profit. So that being said, I have my currency going. So let's go ahead and take a look at what Theo has marked up. He was supposed to only find some 3 B swing levels, right? B swing levels are the most powerful levels that you can ever trade. Okay. And this is what the big banks and institutions find, and this is what they watch. And let's go ahead and look at the very first one that you looked at was APA Corporation. Let's take a look at it. Major thing we want to do is find what the trend is, and then we want to find our discount levels. I like to say that our demand levels is considered discount. So if you see demand, just think of it as discount, okay? AKA discount. If you are on our live today, you probably would see that. So discount will attract buyers. It doesn't matter what market you're in. So that being said, we want to find our levels, and that sometimes can be the most difficult thing to do. So B swings help with identifying levels as simple as possible. So that being said, I'll turn the music down. So sorry about that. So that being said, what is my discount level for APA? Okay. Discount levels, even if we're in a downtrend. So let's go ahead and apply the price action channel strategy. Okay. So let's do this here. We're going to connect our lows. We're going to connect our lows according to the price action channel strategy, the lowest of the low. And then let's go ahead and trap it. Let me delete that. Okay. And then we're going to trap it in a channel. So all I'm doing is copying and pasting or simply cloning it. And then we want the exact same angle. And then we're trapping our highs, right? As much as we can take. All right. So that being said, we see the price action channel strategy in motion. Now, if done correctly, this should also come down to the point of our newly demand at some time and also touch where our demand / discount level is. So one way to find your demand levels, sometimes if you're in a trend, is to track your higher highs and higher lows in an uptrend, or your lower highs, lower lows for a downtrend. So for example, I'm in an uptrend here. I'm connecting my lows. So I can do something like this. I'm connecting point 1, point 2, and then whatever as long as you connect them, right? So one way you can find is you have your lows here. I can even connect this if I want. I have my high, my lower low, my lower high. My lower low was also at the same level as my lower high. One easy way to identify your levels is when you can find your lower highs or your lower lows in an uptrend, or your lower highs and lower lows in a downtrend, and then higher highs, higher lows in an uptrend. So when you see your peaks and your points like this is usually a higher high, or a high in this instance. It comes down, causes a pivot, and this is a lower low or higher low because it's higher than this low. It comes up, higher high because it's higher than this high, and then it comes down. This will be your higher low, but it also came back down here. So this is all a higher low. This is a significant level. Notice how I draw this line straight across. Does anyone? Do you guys still hear music? You do? Oh, okay. Give me one sec, guys. Let me see where it's coming from. Recording. All right. So I was told that the recording was too loud, but I want to go back and erase everything I did, and I'm going to repeat what I said, but I'm going to kind of do this a little faster so I can get to the point, right? So in order to find a level like this here, sometimes it's obvious, right? So when you see this here, this is a demand level here. This is really obvious because this is the low of the low. It hasn't been this low. This is a complete low, right? This is the beginning of your uptrend. But when you have price approaching, you want to see where it will possibly stop and pivot. Now, if it comes here, we're buying all day. But where can it stop and pivot for you to get a few, maybe intraday, maybe a swing trade for a couple of days before it possibly drop further, is where you can look left for clues to identify your higher highs and higher lows. Your higher highs and higher lows will often give you a clue to where to draw your levels. So let's say if this chart was completely blank, and I'm going to delete all of this here, you need to be able to find that because that's going to determine how you get in. Okay. So right here, we can see that price is right here. So now I'm only worried about what's around here and which price could pivot and where I can go. Now we're in a downtrend, so it's probably wise to trade to the downside. However, we are coming up to a B swing, and a B swing will allow you, sometimes it could be a trend reversal, but even if it's not a trend reversal, more times than none, it will actually pivot and pull back a bit before it continues to the downside. So this is one way you can find a reversal, right? So in an uptrend, remember, we're finding a level to trade from here, where price is currently at. But we have to look left around here to determine. So one way you can find it is just finding your higher highs and higher lows in an uptrend. So I have a low right here, our high, higher low, higher high, and I'm coupling these two because they're both at the same level. And this would be a higher low, but it's actually not because it's at the same level as this. See, I can draw a straight line. So notice how my previous higher high right here is right around my future higher low. So this is a key indication that this is a key level, and I can draw it all the way across here. So it seems as though this was around the level that Theo has pointed out. If so, perfect, right? So that being said, we can see higher high again, higher low. Notice how this higher low matches up with this left area right here. I can draw another rectangle here. So this is how you can find levels. And guess what? If I draw a rectangle connecting my previous highs all the way over, if we come over here and dissect it, notice how price bounces off of here to the upside. And I'm on the weekly time frame. So this is a significant amount. So if I grab it from the middle of the red to the top here, that's 20% gain, right? So that's a 460 point gain in which, depending on how many shares you purchase, you could have profited pretty decent. But the reason why it didn't continue higher is because we're still in a downtrend. And I do believe there's a possibility we can get to this bottom low. If it does, I personally will be buying all day. And you can hold that for however long you want. But I think this will be the beginning of an uptrend down here. Now, it's some time. It'll be around maybe the 550 to the 330 mark, give or take. But this will be our key demand level. This will be the ultimate B swing down here. But for now, we're focused on where price is currently at and where we may see another reversal. Looking left here, previous higher high, now higher low, and I can draw this all the way across. And I would expect price to come down. I would love price to come down, and anywhere within the zone, I can buy here, right? Or if you want to minimize risks, you can sell. Does that make sense? Because we're in a downtrend. Remember, we're investors, so we want to minimize risk as possible. Since we're in a downtrend, our impulse move is a lot more aggressive than the pushes to the upside, right? More aggressive than our minimal pullbacks because we're in a downtrend. So you can possibly sell around where price is at up until you get to the support zone, this B swing. All right. Ultimately, this will be the main B swing. This is why I created B swing, is for these absolute bottom levels and the absolute top levels. See how this is not a coincidence? So I can adjust it a bit. So how the supply level is not a coincidence from back in January 2018 to July 2018, September 2018, and it happens to come right back. This price rejected from here, not by coincidence. Now it can possibly go out just a bit, but overall, what I mean by coincidence, not a coincidence, is that it's going to drop drastically. The beginning of a downtrend. This will be the beginning of our uptrend. Very high probability down here. So mark that level, guys, if you haven't already, and mark an alert, and then learn a little bit about APA Corporation if you haven't already. And it's pretty cheap. I think the price is pretty cheap. Do you only look at B swings on the weekly chart? When I'm analyzing a chart, I'm not specifically looking for B swings. I'm not looking for pack. I'm not looking for KISS strategy. I'm simply looking at the chart for levels. So what I mean by that is when I'm looking at a chart, I'm not specifically looking for something in particular. All I do is follow a process, and I'm looking at the formation. I'm looking at what can I say? I'm looking at how the chart looks. So if it's easy on the eye, then I say, obvious uptrend. It's so obvious, right? And then I would start drawing my trend lines. Once I draw my trend line in an obvious uptrend, then I will use the price action channel strategy because it's obvious. If there's no obvious uptrend, now I'm only really looking for levels, like B swing levels, for swing trading opportunity, because those are levels, regardless if I'm using pack strategy or B swing. The big banks and institutions, they buy and they sell off of price on the right side right here. This is what they look at. Just like when you're going to the store and you're buying something, you look at the price. You're not necessarily looking at the trends. There's other companies and institutions that look at trends for products. We're really looking at the price, and we want to know, is this a good deal? In order to find out if it's a good deal, you have to look left to see what happened in the past to see if it was a good deal before. So we're using hints in the past to determine what's in the future. So that's a pretty good question that you asked. I'm not looking for a specific setup, but I think I have B swing, the pack strategy, and KISS in my mind so much that when I open up a chart, I automatically see what I'm used to trading. And that's the power of using your journal and journaling, because you start seeing stuff automatically. Like this was like APA. I never heard of APA at all, but when I seen you drop it, and probably when you, Theo, were looking at charts to try to find B swings, you in your mind were looking at levels that haven't been tested for a while, and this sticks out, right? Now, imagine if you're used to the price action channel strategy and B swing, then you start seeing stuff in your mind replay every single time, right? It's kind of like when you're driving to work or driving somewhere that you go to all the time. You're not thinking about every street you're turning. You're not thinking about the stoplight. It's automatic. You're so used to it that it just happens, right? Um, but the main thing in trading is you want to find these levels, because price action bounces off of these levels. Um, so from where price is at, prices dropped. So I probably wouldn't sell now. I would see if there's going to be a retest. So I'm on the weekly. Let's go down to the daily. So I know that this is an area of interest right here due to B swing, right? But price isn't there yet. Price is here. So let's go down to determine what's happening here. I'm going to just draw some kind of lines right here to keep us focused at this area here, right? So let's go to the daily. Okay. Now I'm looking at price action a little bit differently now. I know that eventually it's coming here, and I would love to possibly buy here maybe from a B swing, even though it's counter trend. But is it wise to buy now? The reason why I would say it's not, I mean, sell now, I'm sorry. The reason why I would say it's not wise to sell now is because within the bigger picture, like our weekly time frame, we have supply and demand levels. The smaller picture, like in the daily, we also have supply and demand levels. So I can look at this here. I can even go down to like the 8 hour, for example, to show you even better, or the 4 hour. Okay. That's why I mark these little skinny lines here so that I can keep you focused in this area. Notice how price is kind of going up and down. I can say this is sort of a support and resistance zone, maybe consolidating. Best price to possibly enter to sell is about here, around $24 even, give or take. Currently is at $20. So can it reach up here? Absolutely. Now, what if you sold here expecting it to come here, but it goes up? Then you're saying, okay, some people may get out or think it's not going their way. They may get frustrated and may play with their mental, because each candlestick represents at 4 hours. So it may not even get to where you need to get to until a couple of days or so. But remember, we're in it for the best price. Since we're selling, the reverse is the discount. This is the discount up here, this minor resistance level, or even around here. This zone here is around the minor resistance level right here. Because if you're selling and you're hoping price to come down, because that's how you're profiting, You want to get in at the best possible price here and let it drop. You don't want to get in here and then it goes up and then it drops, right? So coming up here would be a good area to sell, and then you can sell it back to this minor support level right here, or maybe even take it down to the B swing level here, which could take a little bit further. If you are not comfortable in doing that, because now you're talking about intraday trading, when you're trading in and out within the day, and you're not wanting to wait, or you just want to wait for the bigger picture, then wait for price to come down here to the B swing level, where there will for sure be upside movement. And you can capture big movements for B swing levels, maybe even going higher before possibly continue your downtrend. But we should see some sort of entry or buyers coming in around here. All right, does that make sense, guys? And the way I marked my level, so anywhere between like 1783 as low as $15.10, give or take. So between there, I think it's an excellent B swing level. You could buy at the top of the rectangle around $17 and some change, in the middle or the bottom. The way I like to do it, here's another risk management strategy. I like to get in somewhere at the top of the rectangle. And the reason why I draw it thick is because when I scroll left, I'm grabbing price action from here and from here. So anywhere within here is good for me. As I go back, I can enter maybe, let's say 3 shares here. Let's make this really applicable for you guys. I may enter 3 shares here. Waiting for it to come up, okay? And then if it drops further, I may buy 3 more shares here. All within your 3% risk, right? As long as it's within your 3% risk. So that's why it's important not to just put in your first 3 shares, and you may even want to put 2 shares or 1 share at the top, then 3, and then maybe the most down here somewhere. So I may put in, let's say 5 shares here. Let's change this to 1. Okay. So I'm putting in the least at the top, a little bit more in the middle, because if it comes back, let's say price comes here, let's say price comes down, triggers my first activation here, drops down, now it will be negative, only 1 share from this 1 share, triggers my second entry here with 3 shares. Now I have 4 shares total. The odds are, because of that big drop, it's going to come up. And if it comes up, you're in profit with these 3 shares, and then you will start recovering just from this 1 share. If it comes a little bit further, now you'd be negative 1 share, negative 3. But then once it comes here and it starts to pull up, your 5 share is going to sustain this 3 and this 1. So as it shoots up, you're in profit. Even though you're negative with this first share, you're negative with this second share. 5 is more than this 4, so you're automatically in profit. Once you get to your 3, you're more in profit. Once you come back and recover from this 1, you're even more in profit. You can exit right there before it even leaves this red rectangle. That's all about risk management. So when you manage risk like that, all risking within no more than 2%. So you want to calculate your percentage using that risk reward calculator, or not risk reward, the stock calculator that I provided for the position in the risk management section. You can easily do that. So if price never drops to the 3 share level, do you just move on and look for? Yeah. So if price comes down here from where current price is and it hits share 1, and then it starts to move up, I'm only moving up with that 1 share. That's it. Right? No need to keep adding and all that stuff. Now, if I know now, and the only reason why I would keep adding is if price gets to the ultimate B swing like this. Let's go to the daily chart. Only reason I would keep adding, let's clean this up a little bit, is if price came down here. This is the beginning of a trend reversal. This is why I created B swing, is when we have an absolute bottom, absolute top. The B swing rules is if price hasn't been tested for 6 months or more, that's like for pullbacks. But when it's more, the further the distance, the better, especially if price have been there before and that was the absolute lowest. So if I scroll left, let me go to the week. If I scroll left and I do something like this, so this was around the absolute lowest. This was back in 82. Price is not, I don't think price is gonna, like, that would be ridiculous. But if it comes down here, I'll be buying. Like, that is saying That's almost like saying inflation. That's like you saying you buy, imagine you buying gas now, right? How much was gas back in 1982 versus now in 2025? More than likely, we're never going to be seeing 1980 gas prices anymore. But if it does happen, I'm all in. This was all inflation right here. So this is like the ultimate B swing and where I would buy and I would probably hold it as a trend reversal. Now, if something like that happens, the way we created B swing, I'll show you really quickly with the one shares, three shares, one share, three share, five share thing. Let me zoom in. Okay. So if that happens, price comes down to our ultimate B swing level. I would probably not even start off with one. I may start off with three, for example. I'm in it a little bit more. I'm more invested because this is a huge discount, right? So I may start off with three. And your three may look different than my three, right? If you have a $20,000 balance and I have a $2,000 balance, your three shares, you may triple that or quadruple that because your risk, you can risk more than I can. Remember, risking no more than 2%. So you have a $20,000 account, your risk is a lot different. So instead of three shares, you may do 20 shares, but it's still within that 2% risk. So let's say I will put three shares here for my first entry. It comes down just a bit more, and then it triggers my five shares. Okay. And let's say it comes down a little bit more in my red rectangle. I can even add just one share if I want, or eight shares or whatever. It doesn't matter at this point because now you're all the way at the bottom. But let's just say I add one, right? So it doesn't necessarily have to be 351 or 531. Just as long as you're adding some more, just know that when price starts to return and head to the upside, you're going to start profiting. And in the rare case that price, this looks sloppy. I hate when my screen looks sloppy. Let me clean this up. Okay. So from here, price is going to be moving up. So now I'm in profit from, now I'm in drawdown from this first three shares, now the five, and then it comes down to my one. I expect a pullback. Now I'm in profit from this one. Now I'm at zero from this five. Once it passes it, now I'm in profit from the five shares and the one. I'm already surpassed my negative entry from the three. Now from here, you can keep climbing. And as it pulls back, because I now know that I'm in the beginning of an uptrend, I will add another share here, maybe two shares right here on the pullback, on the higher low. Then it comes up. But as I'm exiting, I'm finding my resistance level right here. Here's my resistance level. So as my three shares here, five shares, and one shares is in profit, and it comes to this higher high or this high, I will pay myself maybe half of it or whatever you feel comfortable with. You can pay yourself the three shares that you initially put in because that's where you're going to have probably the most commission or fees possibly because you held it longer. You can pay yourself, you can do a partial payment. So once it comes here, pay yourself because now you're going to experience pullbacks. Price never just keeps going and going and going. You're going to have a pullback. And when you have a pullback and you identify your lower low, let's say here, for example, now you're going to add some more shares and you're going to take it up higher. Pay yourself on the higher high, exit, partial exit, enter again on the higher low. And you can continue to do that with the same stock over and over again. But this usually works when you know that you're going to be in that same direction for some time. This is what I like to do specifically for like the US 30, the NASDAQ 100, it continues to grow. I continue to play it. Even with Kava, how I explained to you, how it continued to go higher. And when it dips down, I pay myself before it dips down. I add more when I feel like it's going up. Now, Kava is dropping because of a lot of different things in the economy. But that's how you do. You identify a B swing and then you continue to add and pay yourself as it continues to climb. When you pay yourself, it gives you a sense of like, I did it, I'm doing it, I'm in an investment, I'm an investor, I'm paying myself and I'm still in here and I'm exiting every time it pulls back and I'm adding more every time it pulls back to a support and I'm exiting every time it gets to a resistance. So that's the big idea when it comes to like a B swing or paying you. We call it paying yourself. So does that make sense, guys? I know that probably could have been too much. Anyone does it if it doesn't make sense? Because I don't see anyone typing, so I'm assuming that it probably doesn't make sense to someone. And remember, this is a safe place. This is the time to let me know because you can verbally hear me say it. And although I'm there for you in Discord, sometimes it takes some time. And sometimes it may be harder to understand with me typing versus verbally and me showing you visually. All right, it makes sense. That was my question. Okay, awesome, Lillian. Congratulations also to Cassandra and Lillian for completing the course. Great job. All right, it makes sense. Deirdre, awesome. Okay. Um, let me see. Okay, so let's go ahead and look at the next one here. I'm going to look at, um, I guess it's called Viatris. So this is the last one he did, or another one he did. Okay, so I'm going on a higher time frame, downtrend, right? I'm on the weekly. I haven't done anything. So remember, I'm not looking for anything in particular. I'm just looking at patterns. The very first thing I see on the higher time frame is just a huge downtrend. But also another thing that I'm seeing is price starting to slow down. So huge downtrend, and guess what? Now price is moving sideways. Remember, each candlestick stick represents a week. I like to sometimes go back to see how far and low price has been. Now I'm kind of looking at B swings. So I see a huge high, a huge low. I see this dip right here. This is very significant to me right here. This was back in 2008. So could it have something to do with um, the whole 2008 drop that we experienced years ago? So I'm not sure because I'm not too familiar with this company. But my whole thing was I wanted him to identify B swing levels, price that hasn't been tested for 6 months or more. And that being said, let's go take a look. So now I'm going to kind of focus on this. I have this area in mind, but let's see what's happening right here. So price is moving sideways overall, but it's huge. Like this is huge moves on the weekly time frame. So I would say that this is definitely a demand level. We even see a wick here. Now, I would love for price to get to this zone here, and I think that this would be probably the best B swing, and that's around between $7.24 and as low as to about $5. That would be considered a penny stock at the time. Um, but this zone right here is pretty significant as well. So all of this level is pretty significant where it's at. So to the point that it's even wicking off the weekly time frame. So grabbing my tool here, it's about a 5% growth from where it's at. And it started to push up already. So we're a little late, but definitely a demand level. Price was last here, October 30th, so around that time. And now we're sitting in March. So that's not quite a B swing. It's 5 months, but it's still considered a demand level. So you normally find it when you see a point, a bottom, and then a forceful push in the other direction. A bottom, and then you'll usually see a forceful push in the direction. So since I'm not too familiar with this company, I can't really guide you as to what happened. Now, supply and demand is going to happen in every single thing that we see, including this company, and you can see it respecting our demand zone. Now, because I haven't done much research on the company, I don't know if it's going to continue to drop. I don't know if the company is weak. I don't know I don't know too much about it. Once I find out about it and why it's been dropping week after week after week, then I can probably make a decision whether if I will buy or sell. But ultimately, this will be my goal right here from back in November 2008 to possibly sell. But at this point, we may be a little too late. Price can come up, absolutely, and continue to go a bit higher. But I do think that this is a pretty decent level to buy. But overall, in the overall trend, I don't know if we're going to continue down or if we're going to start making higher highs and higher lows, unless I do some research. But if any of you guys are interested in this company, feel free to do a little research and drop it inside of the chat. I'm interested to know what it's about and figure out what's going on. Another thing that I noticed is that, was this today? The 27th? Nope, this wasn't today. So this was actually a couple days ago. So the earnings report came out. Doesn't look too good. We have a strong bearish candle to the downside on the weekly. So let's go to the daily and look at that more. Yep. So we have this strong gap to the downside here. And then we see price starting to pull up a bit. So I'm curious to see if it's going to come back and retest or not. I wouldn't really trade this right now unless I figure out what's going on with VTRS and find out a little bit more about the company. So hopefully that makes sense. But I do believe this is a solid demand zone, just not quite 6 months, but still a solid demand zone. You could possibly even bought at that level, profited, and then it could go higher or it could drop. But Theo, if you want, feel free to let us know exactly what VTRS is. How did you find it? Um, and then we'll research it and see if we can add that to our list to follow. All right, next thing, AMD. Okay, AMD, I spread out my chart. Let's go to the weekly, spread it out, make it make sense. Um, so definitely a higher low. So remember following the sequence, we have a low, high, higher low, higher high, higher low, higher high. So we kind of see that same sequence. Then we have a higher high and then a higher low, which was tested again here. So this is a significant zone. I think we should see maybe a little further push to the downside within our zone, but we should see a bounce up right here. So I think this was a pretty good find. How high is completely up to you. We may even see something like this where it comes back and retest this here. So this could kind of be kind of like a head and shoulders, but more of, it could looks like, almost look like a reversal pattern too, right? Where you see one, and get this. So you have one high, two, three. So this is our downtrend right here. We're making lower highs and lower lows. This, it shot here pretty aggressively. So you can see how price shot down, pulled up, shot down, pulled up. And look how strong this downside movement is. This is screaming reversal, very, very strong. Not a reversal trend, but screaming that buyers are ready to pull in. I think this would be a pretty good buying opportunity here for AMD. I wouldn't quite take it up to this previous right shoulder or this neckline, as we say, but I would say that we can possibly profit from anywhere within this zone and maybe to around one, let's say 120 to be safe, just in case if we continue to make lower highs and lower lows for a downtrend. But we should definitely see a nice pullback. And what I'm looking at is just right here. So let me grab my rectangle. So this would be considered like a minor support zone, minor resistance zone. So I'm just looking at this bottom right here, which connects to this top here. And we should see price pull right back up here. And that's around 120 to 123. I just looked at Fortune 500 and sort of, oh, okay, nice. Okay, that's solid. All right. And let's see. Hey guys, you can see I have my Webull connected. Okay, so yeah, that's good for AMD. You guys have any other ones that you want to take a look at? Theo, remember your the whole reason for you doing this is to keep an eye out on this. Let's definitely take a look at AMD. Um, Viatris, I'm not too familiar with that company, so I can't really say that I'm interested in buying or shorting at this particular point. I need to do a little bit more research. But AMD, I'm pretty comfortable with this. Peter, you said AppleSoft? Oh, Apple and Microsoft. Is that what you mean? Okay. All right, cool. So yeah, let's take a look at those. And then if anyone else want to take a look at anything else, let me know. It's kind of the reason why we do this is also so that you can get used to identifying these formations. Completely looking at a naked chart and then tearing it apart and making sense of it. But the whole thing is just finding supply and demand levels. The only reason why we're drawing trend lines, in which you really don't even have to do, but the reason why I draw a trend line is usually for you so that you can visually see that it's an uptrend or downtrend. But if you can visually see it, then all you really need to do is just find levels. You can get to the point where you're just like, okay, here's a level here, here's a level here. I'm only looking to sell because I'm in a downtrend, right? No need for uptrends, downtrends, and all that stuff. It can be helpful, especially when you're new and you're getting used to it, because we don't buy and sell just because its price is touching a trend line anyway. The trend line is to help guide us visually so we can see the trend. Like if I see this, I see I'm in a downtrend. That's a visual aid. But do I need it? I don't buy because price is touching the top of the trend line. I don't sell because price is touching the top of the trend line. I don't buy because price is touching the bottom of the trend line. It just sometimes happen that way. But overall, they're buying and selling based on the price here on the right side. The key levels, supply and demand levels are the most important thing. Support and resistance, supply and demand is the most important thing when determining when to enter and exit trades. All right, let's take a look at Apple. I haven't looked at that in a little while, but let's see. All right, first thing I'm doing, I'm not focused on B swing. I'm not focused on price action. All I'm doing is getting a feel of price. Now, I've looked at Apple so many times, I already know we're in an uptrend, but overall, I can see I'm in an uptrend. I can make sense of it, right? Sometimes we'll look at some stocks and it's all over the place. There's no uptrend, no downtrend. The sideways trend is weird. But when it's clear like this, it makes it a little bit easier. So in my mind, I want to buy Apple, but I want to buy it only in support or if it's at a demand level. So let's do this without even drawing any trend lines. Let's dissect it here. I can give you a visual aid here really quickly. Here's our low, our high, higher low. It didn't make a higher high. It was the same level. So this is okay. We're still intact. Our uptrend is still intact. And then it dropped slightly below this one here. So one could argue that this is still intact or not, but regardless, we're still in an uptrend. So that way, so this is the reason why I would draw my trend line from here instead of from here. This right here is irrelevant. I no longer need this. I'm just trying to find my trend. So I'm going to follow from the bottom here because remember I had a low here and a low here. So now this is kind of like my establishment of my new low. All right. And then let's follow the sequence. I'm doing this so that it makes sense to you guys. Let's just say this is a higher high, higher low, higher high. And then this higher low is actually lower than this one. So one could say that the uptrend is disrupted. On the weekly, it's not. On the daily, yes. This would have been a clear downtrend right here on the daily. Let's show you here, or even the 8 hour, right? So we want to see price resting at this level right here. See how it matches right here? Right here. So you want to see it break no lower than this. But since it broke, one could say the uptrend is not intact. But on the weekly, it is intact. So it's important to kind of look at the higher time frame just to get a good gist of what's going on. All right, so let me clear this up. Start over. All right, so on the weekly, I'm going to just draw my trend line, upside movement, Fortune 500 company, uptrend. I still have my low right here. I have my low right here. Here's my higher high. If you have trouble finding level sometimes, simply look for your higher highs and higher lows on the higher time frame. Here's my higher high, and then oftentimes if you find a higher high, then you will find it a higher low in the future or a good price to buy. All right, so this will be a pretty decent area to buy. Price is currently up here. Let me zoom in. Okay, price is currently right here, so we've missed it unless you traded this wick down here. This would have been a good time to buy. Now price is up here. I think it's not a good time to buy at this point. We don't chase price. This will be our supply level here. This is our higher high or a new higher high. It dropped below our higher low right here, and it tested our trend line, and then it shot up and came back to retest this higher low right here. So I think this is the real price action right here. Real price action right here. It just dropped probably liquidity grabs. It could have been news at that time. Let me see what happened. So this was January 13th. I think, when was the tariffs announced? Was that in February? So it's something around here. I'm sure this was some news. And then you can see that their earnings report right here shot that right back up, testing this line here. All right. So price, I think this would have been an excellent time to buy. It's too late. If it comes back down to this level, I think it would be pretty good. So let me go ahead and add an alert for you. And feel free to add this alert as well. Always put the name of what I'm trading and then I put possible buy or possible sell. So that way when it alerts me, then I know what's going on. And it's right in this zone right here. So if you're on the weekly time frame, so right in this zone, you want me to give you the alert that I marked? I try not to give you guys the exact answers, but just to kind of mark it yourself so you can see it. So my alert is at around 234-ish. So anywhere within here, we should see an upside movement. And you can exit wherever you want. I like to exit prior to this previous high because it could take some time. But anywhere that you feel comfortable with, this is like my resistance zone here. This is my support zone. In the middle will probably be ideal to exit, somewhere in between these two areas here. So right around here, I think it would be a pretty good exit. So somewhere in the middle, right? Does that make sense, guys? Don't want to be too greedy. Can you measure that move to see the gains? Yep. So from where? From the absolute low to the middle? Let's see. So I would say somewhere in the middle. I'm not even counting at the bottom, but let's say in the middle to about here. That's about 5%. So $10.74, which is 1,074 points. So let's say you bought 5 shares. Not too bad. And probably take a week to get there. All right, let's take a look at Microsoft. All right, let me clear that up. Okay, so Microsoft, you can see I already have my levels here. I believe we may have went over this. I'm not sure if we went over this last week or not, or I know we've gone over it and put it in Discord, but you can see how it clearly rejected it already. Let's go to the daily. All right, so just on Thursday, price shot down in our rectangle, looking left for clues, right in here. I know it can go as low as this zone, which it did. See this wick right low in this zone. I should have dropped this down a little bit. So right in here, and it just is no coincidence when you see stuff like this, because this is the discount. And in the past, it discounted at the same level in August 5th. Before that, it discounted at this level April 26th. And before that, it was there in January 2024. So an entire year, right? So upside movement from this point on. Even if you missed it, well, we're never talking about chase the trade. It's already headed to the upside. But I like to look left sometimes for clues. Every single time when price came here, look how high it went. Again, look how high it went. Same situation. We should see it at least come back to around this zone right here. And we're talking about Microsoft. We're not just talking about some janky company. We're talking about Microsoft. So you can pretty much feel comfortable about something like this, right? This is where people get afraid. They will buy, price will come back down and retest. Oh man, I thought Brian said it was a buy. They'll be down $2,000 because they didn't use proper risk management and close their account. So that's why we always say risk management. It doesn't matter how profitable your strategy is. If you're not risking what you should risk, you can wipe it all out, even at a good level. So we always tell you guys, if just risk no more than 2%. Don't worry about the gains, 2%, or if I'm only risking 2%, that means I'm not profiting that much. Don't worry about that. If you continue to profit, your account balance is going to get larger. If your account balance is larger, then you can risk more. So just worry about saving. Worry about profiting small first. Let your account size grow. Then your 2% risk will be a lot larger, so you can risk a little bit more for 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 entries like this. Okay. This one is the most obvious to me. LOL, if I lose on this one, it wasn't meant to be. Yeah. And see, the purpose of B swing and price action or any strategy is so that you don't have to think. So that way, if price goes against you, you lose 2%, you lose 2%, you still have enough money in your account to trade another day. Sometimes we think too much. Like we in our Forex Academy, Kenya would drop something, for example, hey, GBP, you know, whatever, USD GBP is going to be doing this, GBP USD is going to be doing this. And if it draws down, a lot of times we get nervous. But you have to understand, one, 2% max risk. Two, trust the system. Just wait. You're an investor. And I sound like a broken record, but as an investor, when you buy a home, you don't expect to profit the next day. Hold it and just wait. We're trading Fortune 100 companies, Fortune 500 companies. We're trading Microsoft. It's going to go up. History has told us it's going to go up, right? Now we're at the best level. Look how discounted this is. You won't know how discounted it is until you see how much it used to cost up here. Look how discounted it is down here. Again, look how discounted it is right here, right? Again, look how much discounted it is right here. So I'm just kind of getting your eyes used to seeing levels like this because you'll start understanding. It's not coincidence that when price came here, shot up and then came back down at this same area. It could have, all the places it could have come down from here to even lower is stopped right here when you look left. If I measure this movement from here to here, that is a 17% growth. Again, if I measure it from here to this high, that is a 26% growth. Just trust the process. But if you would exit or risk too much when price comes here and it's taking too long, remember we're on the weekly time frame and it's taking too long, and now it's the third day and it's still here and you're down 20 bucks, or it's not moving, it's consolidating. Remember, all of this is consolidation right here on the weekly before it shoots up. Just trust the process. And the whole point of you trading a strategy is so you don't have to think. So if you enter, as long as every single step of your strategy hits, be confident. If you lose, that's just the one off, right? But you have to understand when you're trading a profitable strategy like this, because we use supply and demand, we're price action traders. We believe that in every market, there is supply and demand, regardless of what market we're in, if it's the grocery store market or the stock market. Supply and demand, you cannot escape because that's how the rich get richer. It's unfortunate, but it's true. And if we follow big money, this is big money, supply and demand, then we will profit with them. They're not going to put price on sale and let it keep dropping. So, because if so, they're losing money now. But our job is to find where the sale is right here, demand, discount, AKA discount, and buy with them. Now they may shoot it down just a bit and do something like this, slightly lower, hoping that a lot of you aren't risking, don't have no clue what risk management is, and you put in 100 shares because you're at a discount. They're hoping, they're wishing you they can take your money, liquidity grabs. They will shoot it down just a little bit further, maybe even to this level here. This is still a level. But if you're risking no more than 2% and you just hold on, remember I say put a little bit first, maybe a little bit more as it drops down, and then hold it sometimes, just wait. You will be in profit because I know that I'm ultimately in an uptrend. It's going to have to recover. I'm in an uptrend. Just hold it long enough. You'll be fine. And this will breed psychology. So a lot of times people are afraid. They want to know, how can I have a trading psychology that is up to date, that is upgraded? Trading psychology is nothing more than managing your risk and finding levels. And when you have a strategy that has all of that, you don't have to think. Don't think. If you're thinking, it's because you're risking too much. Let it sit and let it ride. If you're thinking, it's because you put a stop loss outside of your 2%. If you're afraid, it's because you haven't journaled your trades enough times. So that's why we give you that journal, so you can start journaling, paper trading your journal, documenting it. You'll see this stuff set up all the time, to the point where it's like, okay, I'm tired of seeing the same stuff. That's why I can open up a random chart. I'm going to Disney, for example, go to the weekly time frame, and I just look around. When I look around, I know exactly what I want to do. I'm not thinking about a strategy. I'm looking at highs and lows. That's it. Highs, lows, and trends. If I can't find a trend, I'm finding a low. If I can't find a low, I'm finding a high. If I can't find a high, I'm finding a trend, and where can I find my support and resistance within that trend? That's all you're doing, and that's all what PAX and B Swing is all about. The other strategy is a indicator strategy, and that's really designed for people to start off, right? It's something easy. Some rules say, okay, this indicator do this, and then this and this, and then buy, right? So it's not anything I would say is sustainable, but it's something that you can try out, something that actually works, but it's nothing that I would say that you should rely on if you want to become eventually a full-time trader. You want to continue to look at supply and demand. Supply and demand rules every single time, because the big banks, the big institutions, big money can't make money unless it's at a discount. And we're here to identify the discounts with them. All right, guys. So that is it. So another potential B swing Pepsi. Let me take a look at Pepsi, and then I'm gonna head out, guys, because it's been an hour. Let's see. I don't even think I have Pepsi on my list. I just have Coca-Cola. Yep. So let's take a look. So before I go there, mm, so price has already moved up pretty significant. Let's say from here to here, about 10%, pull back to about 7. So about 7.5%, give or take. Um, this could possibly be a B swing. What I'm looking at is this here. Remember, usually when you see a poke and then a drastic drop, that's usually a significant level. Let's draw this all the way across to see if that is it. Oh yeah, that's pretty good. That's a pretty decent B swing here. Another B swing is right here. This would be even more significant here. And you can see how this is a powerful B swing. Will probably take some time if it does. This will probably be a reversal area here if it did. But this is a powerful B swing. You can see even now price is already shot to the upside. So we're a little late. Price could come back down and retest, but if it comes back down and retest, I wouldn't count on buying again because it has tested this level already multiple times within the last since January. So that if so, it will probably tell me that it will want to continue even lower. So April 29th is their earnings. Yeah, but that is actually a good point though, Cassandra. That is definitely a B swing zone right here. It's already pretty much made a decent move. It could go a little bit higher, but signs are telling me that it could drop a little bit. It could drop some more. All right, guys. So hopefully this made sense. Let's just touch base and follow up with these stocks. I'm counting on you guys too, right? So I put in as much energy as you guys put in. Sometimes I may put in too much, but I have to remember to dial back. So sometimes you may see me pull back on commenting because sometimes I get excited. I'm like, okay, I need them to really dial in. This is what growth is about. You guys have to start putting it in. But based on what you guys say, the questions you ask, what you do will determine my energy towards you guys, hopefully. And I say this in multiple modules. This is your Discord. This is yours. I'm only here to assist you guys. So I want you guys to take ownership of it. Go in the team talk sometime and talk, gather, get some groups, some times together, and just talk, right? Share your charts. And that's pretty much it. All right, you're welcome, Deirdre. I'm glad to see you here. Glad to see you guys here. Really appreciate it. I'm gonna get the recording up as soon as I can, and I really appreciate you guys. God bless you guys. I'll see you on Monday, and let's keep track of these charts. You're welcome, Pamela. Good to see you as always. We have some graduates, some course completions. I call it course completion because in our Forex Academy, we require a little bit more. We want to see journal trades. We want to see consistent trades and things like that. This is more of a course completion. I'm thinking about maybe adding that where we get you to drop more trades. This is more of a choice. So if you want to get to that point where you want to become consistently profitable, I need to see at least 50 trades in your journal using either the B swing, the pack strategy, or the max strategy. And it has to be consistently the setups has to be consistent. I need to see B swing level 6 months or more. I need to see the price action channel strategy where you have your trend trapped in a channel or price trapped in a channel, showing your levels. So there's more into it. So I'm thinking about it, but it's not set in stone yet. But other than that, guys, God bless you. I'll see you in the charts, okay? In Discord. Take care.